Basics of accounting, budgeting, resource mobilization. That's basically smart money budget is what we will be talking in today's presentation. The agenda is very simple, very straightforward. We will like to understand why budget is necessary. The question that we need to answer is why budget is necessary. Exactly. The second one that we would love to address is what is a budget? What is a budget? And how do I create a budget that best suits me? So, essentially, what we are talking about as far as the agenda is concerned, why is budget necessary? What is a budget? And how do I create a budget that suits me in the first thing? So what is important? First thing is first. What is important? Follow a practical budget that which can help you all together. And how do I come across with it? As on when on basis. Develop better financial habits? Yes, definitely yes. We want to talk about relieving emotional stress. Why emotional stress? Because herein you have allocated funds for everything in advance as such. Assist you in achieving your financial goals. You have a predetermined goals and a predetermined time frame as the case might be. Why is budget necessary? If I may say so, budget is necessary because it defines and identifies your goals, manages your money, directs your money flow, increases your saving. So budget is necessary to identify, define your goals, manage your money. You please understand the flow of money for what it has been coming and how it has been done. It directs your money flow altogether. Increase your saving perhaps and avoiding unnecessarily spends as on when on basis. And that is why budget is necessary. I've just given you 5 reasons for why budget is required in the first place altogether. That is what needs to be done. Achieve your personal goals as on when on basis. What needs to be done? What is a budget? Let me tell you what exactly is budget all about, all around it. It's a plan for the coordination of resources and expenditure. So what is a budget? Is a plan for coordination of resources and expenditure as on when on basis. How does it goes around? What needs to be done? Simply put, a budget is a plan for managing your money in a way that best suits your personal needs, your personal requirement. Now, the Webster Online Dictionary says it is basically the flow of money and how does it flow, where does it flow, and what are the reasons behind it, the resources and the expenditure that we are talking about it. Simply put, a budget is a plan for managing your money the way you want to best meet your personal needs and wants as the case might be. 7 keys to effective budgeting. Now what are the 7 keys as the result might be telling it to you? Identify and develop personal goals, evaluate the record current trends both income and expenses, identify and develop personal goals, evaluate the record current trends both in terms of income and expenses, assign priorities, develop a timeline for the month. Keep it simple, keep it short, remain flexible. One size does not fit all. And the last one is to review and revise it. So these are 7 keys to effective budgeting. First, identify and develop personal goals. What is the end result that you want to go around it for your budget? Evaluate the records, current trends, both income and expenses. Assign priorities. Develop a timeline for a month. Keep it simple, remain flexible. One size exactly doesn't fit everyone. Review and revise as the case might be. Budget is effective. I repeat, budget is effective money management. Effective money management is nothing but planning how to get the maximum from your money. Make your last dollar counts the most mileage as far as usage is concerned. Good money managers keep a track where the money goes so that they can make it go much more further. The last dollar reaches the last mile, perhaps even more than the last mile. Effective management includes developing personal financial goals, organizational financial personal financial records, creating a monthly budget for yourself, probably evaluating the personal financial health as the case might be, and how do I go around it. So creating a budget begins with clear, accurate, well thought out plans. This will allow you to able to adjust plans, activities, spending as on when on needed, spend the money cost effectively, reach the specific goals you have set, strengthen internal control system. And this is exactly how will you plan it. Creating a budget begins with clear, accurate, well thought out plan, as the case might be. This will allow you to ensure that all your money is being spent very effectively. You need to reach a specific goals. You need to strengthen your internal control system. So what is in a budget? First and foremost is your income. Simply put, any money that is earning, that you are earning, or the money that is flowing in, contributing to your household, in terms of your personal finances or businesses. And expenses, that means the money is flowing out, going out of the system, money that you spend. This includes anything that you purchase, that includes both planned and unplanned, unexpected expenses thereof. So essential steps in budgeting: set a financial goal. All of us must say so. For our company, for our organization, for ourselves, estimate your income, the revenue that needs to be generated, the money that needs to be, that is flowing in, the income that you are generating. Record what you spend. Now try to track the money that is flowing out of the company, expenses, expenditure on your personal front, which is planned, which is not planned. So budget everything, as in what can be planned and what can not be planned, as in actual and unexpected expenses. And properly review and evaluate them on a monthly basis, absolutely, for a company on a quarterly basis. Set financial goals, identify them, write them out. Set, let's say, 1 year to 5 years plan, short term within a year, within 3 months, 6 months, 9 months, 10 months, 12 months. That is what the short term plan is all about. It make them achievable. Ensure that you write them down, owned by everyone. Ensure that everybody is knowing about what has been planned. Keep them in the forefront. Journal the process, celebrate the completion as the case might be. Write them in your monthly budget as on when on basis. Adjust them as necessary. Now here is the time where you can estimate your income. Make a list of each income stream that you receive on a regular basis each month. The key is to include the income that you get every month as on when on basis. Include both monthly wage earns from your job as well as monthly supplementary incomes, that is the child support, disability, etc., etc., that comes around it. Mark down the date that are received as on when on front. This is what you are looking out here. Calculate the monthly income in totality. Absolutely, calculate the monthly income in totality. Record, but do not include any periodic income you may receive at this point. This is what needs to be done. Estimate your income. If your income is unpredictable, estimate what you will do to receive next month. What will you need to adjust her down a little? Now, this is what is budgeted for. Record what you spend. Review your month's checkbook, ledger, bank statement. Record your spending, your income. Record what you are spending for the next month. What might be your actual expenses? What might be your unexpected expenses? What might be your actual incomes? So actual expenses are, identify them. Fixed expenses, let's say the rent, the car payment, the equated monthly installment, EMIs, if I may say so, the loans if you have anything. Record the monthly payout, deadline, and plan accordingly for that payday dates. The payout dates needs to be planned accordingly. On the other hand, variable expenses is identify recurring expenses that fluctuate on a monthly basis. Grocery, the automobile. Calculate on an average what is to be done and how it is to be done. Consult with your friends and families and what they spend, how do they spend, and how do they manage their money perhaps. And that is what we should be looking. Actual expenses are nothing but rent or mortgage, which you are bound to pay around here, come what may. We are talking about car, let's say upkeep of the car, servicing of the car, gas, the payments that needs to be taken care of. People often have their insurance policies, something on the health front, something on their life front, something on a medical, something on automobiles, on home insurances, property insurances. What are we are looking into it? These are things that you cannot uh, defer. Food, essentially, if you don't have food, if you're not alive, what will you do with the money? What will you do without the money? Household utilities, perhaps, yes, your gases, your electricity bill, your heating arrangement, your cooling arrangement that the houses require, the taxes that needs to be paid, the clothing which you have to wear it out. Now, these are your actual expenses. Plus, we have to make room for entertainment. What else are there in the budget? There are plentiful of else's. Let's say any loans that you have taken, mm, perhaps your education loan, perhaps your insurance payment, perhaps your entertainment, movies, income tax, childcare, medical bills, savings that needs to be done in your savings account, retirement fund, brokerage account, vacations. So budget for those things, the unexpected results. Let us look what is an unexpected thing. First and foremost thing is to create an emergency fund. You never know when the medical exigencies arise. You never know when you have to make a trip outwards outside the station. Initially, the emergency fund should be approximately $500 to $1,000, depending upon your income. That should suffice. Essentially, I speak whatever your monthly income is all about, you should have at least 90 days of your expenses in your emergency fund. Eventually, you will need to this. See what has been written is from 90 days to 180 days, 3 to 6 months worth of your income should always be there in your emergency fund. Develop the attitude that is the only used for emergency. Let's say you go unemployed, you are in between jobs, you are having unwarranted medical exigencies or any other financial crisis. Should you use the money in this fund or emergency? The priority for next month is to resupply the fund. Remember, Murphy laws always strikes. Murphy law states you when you are expecting the unfortunate thing at the least possible time, absolutely not expecting it at all, it will automatically make itself available to you in front of you. And that is what is Murphy law is all about. It unexpected expenses comes when they are least expected. Budgeted terms, let's say talk about surplus. When there is a positive cash flow, that means income is more than the expenses. When there's a more expenses and less of an income, is a deficit occurs. It's a negative cash flow. Discretionary income is the money that is left after you have paid everything for essentials. Everything for essentials and even to certain times non-essential. Discretionary income is to evaluate the strength of the personal income, whether he or she is financially vibrant, the company is financially vibrant, represent the money that you can spend on your desires, on your wants perhaps. So yes, review and evaluate, review on a monthly basis, understand on a quarterly basis for the company, evaluate the budget against your personal goals, against the financial personal goals altogether. All the monthly deficits should be addressed as quickly as possible. Everything that needs to be accounted in a company basis needs to be done out there. Any surpluses needs to be added to the savings or probably for capacity building for the organization. Considered operating on a cash and loss system as in zero defect. You try to work in a silos with every time that you start. Never get discouraged. Practical budgeting tips. I would love to go around and wind it up this video with this particular slides by making the budget has to be balanced. The income must equal expenses and not vice versa. If you make, you must have a destination for that money. That does not mean that you must spend it. Planning to put money in some type of saving is great. Some type of cash surplus is always great. The income must equal expenses come what may. Plan carefully. Estimate should be the based on some data. Cover every expenses perhaps. Be practical, be flexible at the same time. Ensure that your budgeted amount should not be fixed. You should be having some amount of leg room. Write down your budget down and be able to access your budget data as on when on basis. With this, I come to an end of this presentation. Thank you for watching this video till the very end.